Uh, the stop trailing loss basically lets you, to maximize the profit at the same time minimize the loss as well. So imagine, you bought Microsoft stock around $220, and then uh, on one day, the Microsoft had a huge news. The stocks keep going up 250, 260 like that. But you just keep, limit orders, right? Let's say you buy it at 220, you might keep it at sell limit order at $240, right? And they the Microsoft, all of a sudden it went to $270, and it just you feel like, hey, I should have just really sold it for the better price. Okay, so I'll give an example how the stop trailing loss works, and then I hope you can see this example here, right? So I was talking about Microsoft stock, and imagine that you bought it at $220, and the stocks keep going up, right? So typically we use sell limit order. You buy it at 220, you wanted to take a profit at 10%, things like that. Okay, and you keep it at sell limit order at 240, right? And all of a sudden Microsoft stock went to 260 or 270. You will just get a profit of $20, right? And you are so busy with day-to-day office work, and you really need a technique where you need to maximize your profits. So I'm going to share one example here. See the same stock, the Microsoft 220. Whenever you buy, you always keep a stop loss. You always keep a stop loss for, let's say, 10%. Okay. If the stock goes down 10%, you are out, right? So similarly, what if the stock keeps going up? The system has to automatically update your stop losses also, right? That's what the stop trailing loss do it for you. So when you set up a 10% trailing loss, so if the stock moves up, let's say the stock goes from 220 to 240, system automatically keep move your stop loss up, right? So when it moves to 240, the system moves it further to 220, and then like that. When it moves to 260, the stop loss also will keep going up. Okay, I'll share one example how we can place the trade, and let's to stop trailing loss. I'll take Microsoft itself. So Microsoft, I'm Microsoft is around 343. Okay, so imagine that you're going to now buy this stock, right? You're going to buy this stock. Let's say we give alert in the premium channel. Uh, we buy it. I'll just trying to buy one stock. So this is how you just keep buying, right, with the limit price and everything. And when after you buy, and what is your sell limit or sell and a stop trailing loss order? Go to sell, click on sell, go to edit. Here we can select an option called trailing stop order. Okay, so imagine that you bought it around 343 on Monday, and you wanted to place your trailing stop order uh, beginning itself. Okay, so you can just select trail stop order. Okay, when you select a trail stop order, it will ask you here, hey, whenever you buy 343, how many dollars you wanted to lose if it goes down, right? So let's keep, I'll put -$5. Okay, what I did in the trailing, I just selected -$5. Okay, so what this means? So imagine you bought it at 343, and by the time the market opens and the stock goes to 338. Okay, if it goes to 338, your stop trailing loss will just get executed because the stock went down minus 5 points, minus like $5, right? So that is a fundamental concept of stop trading loss, and how it is very helpful to you. Let's say you buy the Microsoft stock at 343, and then you keep this stop trailing loss. And imagine if the stock goes to all the way to 360, right? If it goes to 360 and then never goes down by minus $5, right? If it goes to 360 and come back to 355, then your stop trailing loss will be get triggered. You will be selling at $355, right? I'll show one more time. Buying Microsoft at 343 dollars. Okay, and the moment you buy it at 9:30, you will also place a sell with stop trailing loss of $5. Okay, right? So there are two scenarios, right? The moment you buy it, there are two scenarios. One is Microsoft drops by market open. Let's say it goes down 20 points all of a sudden, right? Then you will sell Microsoft at 338 dollars. Okay. So there is another option. What if Microsoft stocks all of a sudden it went up to $370, right? If it went up to $370 and drops down by 5 points, $5, then you will be selling Microsoft stock at $365. Okay, so the key thing here is you need to make sure Microsoft keeps going up and never go down less than $5, right? And imagine sometimes it goes to $355 and then here it went down by $6, right? So you will sell at $349, right? Which doesn't make much sense. Okay, so system will automatically take care of the stop loss. It adjusts the stop loss. It just like it tells like a if it goes 355. So this is how it works here. The stop loss for stop trailing loss is like market price minus $5, right? This market price is very dynamic. The moment market price goes less than $5, it just drops it. So usually what happens, this is like high of the day. Most of the time, this is the high of the day. moment it goes to high of the day and then drops by $5, you will be selling at that particular. So we suggest keeping, uh, let's say, if it's a penny stock, right? Penny stock, I suggest keeping it like at least a $1 as your stop loss, because imagine $5 you buy any stock and you have to give at least a dollar, you know, risk, right? Here your risk to reward ratio is one, right? You may lose $1, but you may gain like $9, like $4, like whatever, right? If it goes like $5 to $7, then your risk to reward is like 1:2, right? So always, most of the time, whenever you trade any of the stocks, okay, you always place a stop trailing loss. Okay, so let's do one live example. Okay, let's do a live example. I'll go to on demand. So typically what we do, you always try to buy the stock, right? You buy it with a limit order. Then again, you just click on a sell order. And here, so I think on demand doesn't have the trailing stop, but I can just show in the live itself. Okay, it doesn't have the trailing stop here. Let me go back to step. So let me show. Okay, so morning, let's say, if we say the alerts like, okay, buying Microsoft at 343 and target one is 360, right? Target two 380, stop loss written like $333, or even let's do like $325. Okay. Okay, so how do you place a stop trailing loss? Whenever we said everything, we are going to do everything all together, right? So we are giving here the risk to reward ratio is more like uh, $18. Yeah, almost $17. So let's try to cut the stop loss somewhat around 335 or 338. Okay, just $5. I don't want to give more. $5 risk to make $17, right? You are almost like this is like 1:3 risk to reward ratio. Reward ratio is 1:3 closer. Okay, let me share this. I'll right click. Okay, click on buy. Okay, so here typically let's say whatever we say $343, right? We will just tell I'm going to buy it at a limit price 343. Okay, and you can also condition your sell order also, right? So for that you need to select, go to advanced order. In the advanced order you have first trigger sequence. Okay, first trigger sequence, and select the first trigger sequence and right click and create a opposite order. Here, see, we got the sell order. So we got a buy order already, and you got a sell order right here, right? Here, change this to trailing stop, and trailing stop here, just set -$5. Okay, so let me bring my notepad here. Okay, yeah, this is much better. So I am trying to buy the Microsoft stock at 343, okay, and a limit order, and my stop trailing loss I'm just setting as -5, right? And you can just put it, and then just most of the time we can just like, if you're busy with the work, again just forget it. We can just like set up this and do a confirm and send. So what happens here, so your risk is already taken care, okay? And again, what if the stock is like 343, it goes to 350, 360, and 370, automatically your stop losses will be keep pushing up, right? Automatically it will keep pushing up because you are setting the stop trailing, right? You're setting the trailing loss for the market price, right? You are not setting for only whatever you bought it. You are setting for a market price, which means that here, right? Market price, this is what the stock keeps going up. So basically you are just saying that, yeah, I think I already mentioned here. Stop loss is the market price minus $5. So that's what it does. The moment the stock keep going up, it will just keep pushing your profit taking, whatever stop losses here, right? In that way, you'll be like, you are safe. Your loss is taken care, and at the same time, you are maximizing the profit is also taken care. Okay, so I can just do a confirm and send, right? If you are very busy, right? Very busy, you can also like save this order. I'm going to share that one too. Confirm and send. So pretty simple here. I'm just trying to buy the Microsoft stock at 343 and then trying to sell for uh, the stop trailing loss for $5. Okay, that's it. And just come here. Right. Okay, so your buy order and sell order is placed. I'll show one more time. Right click, click on buy, click on edit, and here change it to first trigger sequence, and right click on the buy order, create a duplicate order, so that you are creating the a reversal order. I mean, you can let's delete. Right click, buy, edit, change it to first trigger sequence, and right click here, create an opposite order. Yeah, we can just create an opposite order right here and change it to trailing stop. And you say that, I don't want to lose minus like $5 or lesser than that. I'm okay, right? You can just confirm and send it, right? I said both. And sometimes if you're, if you want to make it a little more changes, you can just move it down also. But again, we set the market price, right? So this one you can just set it just like that, and then just continue. And see here we mentioned the stop trailing loss. Stop trailing loss. We mentioned how much of dollar you want it. You are okay to lose it. right? Stop trailing loss. I'll come back to my slide here. This stop trailing losses, there are different, there is another version too, which also tells the stop trailing loss percentage order. So there, like I mentioned right here, okay, the first one, the stop trailing loss, will have you, set like, set the price. How much of dollar you wanted to lose it for this trade, right? Again, we have another stop trailing loss percentage order, which will, make you set how much percentage of loss you're okay to lose, right? So people sometimes, a lot of analysts or traders, they talk about 5%, 10%, 15%, 20%, right? And how you can, set up a similar fashion. So instead of setting a dollar price, you can set up a, certain percentage price too, right? So let's take this example for Microsoft, right? So I'll just remove it, my orders. So I'll do the same thing here. I'll click buy and I select the first trigger sequence and I'll create opposite order. And here in the order type, I'll just select there is yeah, they have a trailing stop limit. That is, they don't have the trailing stop percentage order in the desktop app. There is in the mobile, in the Thinkorswim mobile app, we have mm, think like, stop trailing loss percentage order. I'll show that in some time. Okay, so you can use that as well. Trailing, there is a stop limit. I mean, I strongly suggest use this stop trailing so that you can just set up certain dollars or certain, price. I think that would be more safer, I would say. Um, so let's take an option. Okay, I'll do one option now. Okay, a lot of people worried, like, they're not very sure how to place a stop loss on their, sell orders, right? So typically, let's say, Microsoft on 26 November 21 expiry, and they would like to buy, let's say, this 350 calls. Copy the 350 calls. Okay, so this is the option chain, and you can see nice descending. Usually, options are premium meeting, right? Now, I think that we just gave the alert. Okay, let's say buying Microsoft 350 calls, November 26th expiry. Okay, and right now the premium is around, let's say this is around 71. Okay, premium is around 71. We say 50%. If the premium goes down by 50%, you can just exit the trade, right? That's usually our stop trailing loss percentage, right? Yeah, sometimes we can just calculate just by the based on the premium itself. Okay, I'll just show the stop trailing loss percentage also today. And let me know my Okay. So I hope you can see my screen here. I was talking about the stop trailing loss percentage, right? So imagine the same Microsoft stock. Okay. So now what I'm going to do is I'll just show the stock buy order and then selling with the stop trailing per order percentage. Okay. So I'll click here. You can create an advanced order. When you create an advanced order right here, you want to buy on a market price. Let's say I just select a market price. Okay. You're going to buy just one stock of the Microsoft on the market price by Monday morning. And here we select first trigger. Let's select first trigger sequence. Okay. So we are buying one stock on a market open, and here we are just setting a, yeah. Typically, this is how you do it, right? Just $5 trailing stop, $5. Oh, okay. This is quantity here. Here minus $5 on the mobile. Okay, very, very simple. You're trying to buy at a market price and you're trying to sell whenever it goes less than $5, it will automatically sell. If not, if it goes up 360 and comes back down, you'll be still selling at this price. Okay, and you can also set your the time in frame to the GTC, and time in frame should be GTC. Okay, you can just set up this order and preview, and you can just send it. So basically, we're trying to buy the stock at market price at open, and then immediately we're setting a stop loss, which is a stop trailing loss. Okay, let's see if they have. I'll just cancel everything. Okay, I'll try to I'll try to show this one more time. Okay, the same Microsoft. I select create advanced order, and instead of first trigger OCO, I'll select first trigger sequence, and here I'll buy it at market. Okay. Yeah, right now I don't see the trailing stop percentage in the Thinkorswim also, but you can just this one you can just pretty much you can use it as you can calculate and then keep it. I would say if it's your percentage, like okay, you're okay to lose, let's say 5%. You calculate 5% of 343, and then you can just mention you want to keep it like $10. You can just go ahead and set up like $10. Okay, let me just do a simple sell. Let's say sell. Okay. um mm, you can also do, there are a couple of things, so we give two targets, right? So we give two targets, target one and target two. How you can automate that one? Okay, so let me share that one too. Um, let's say I say the same Microsoft stock, and I just buy one stock and buy it at whatever limit price, and I'll create an advanced order. And here I do a first triggers all, where I'm trying to buy Microsoft stock at $356, and at the same time I wanted to sell it Here I'll buy two stocks. Okay, I'll buy two stocks, and here I will sell one stock for the target 370. Okay, and I select time and frame GTC, and other one I wanted to sell it for 390. Okay, so this is my target one, and this is my target two. Microsoft I'm buying at 356 or whatever. Let's say I'll make it like 343 on a pull down. We can set up however you want. You can just set up 335 however you want. Okay, just make sure the order gets triggered. Okay, so it's very simple. I just selected first trigger hall, where initially it buys the stock at 335, and it sells at two different targets, right? So basically, first 50% of the stocks we are selling at 370. The second stocks we are selling at $390, right? So you guys know, right? Our targets. We have target one and target two, right? That's what here I'm trying to buy at certain price, and I have target one, I have target two. You can set up everything automatic. You can just go set up your trades, and then just you know if you're very busy during the day, you can just set up this orders, and then just let the system take care of the stop loss, or the profit taking here. The stop loss is not mentioned. It's only the limit, sell limit. We're selling in different limits. We're selling in an installments. Okay, so that's about how to place these through the mobile also. Okay, and I'm using thinkorswim mobile app here. So this is like, it is provided by TD Ameritrade. At, so I'll show one on options chain. Let's say this Microsoft's options 350 calls, and expiry November 26th, right? And I just wanted to show both buy hand, sell thing. So what I do, I just selected the option chain, and then I right click. Okay, I click buy and click edit. I wanted to buy at a market price. Okay, and at the same time I wanted to create a sell order also. What if all of a sudden you can see the trailing stop? You can see right here, right? You can see the moment it drops by, let's say, minus 0.35. You can set up. There's a different way you can hear this. Yeah, the trailing percentage right here. Sorry, other time, last time I just forgot to tell you right here. There is an option right here itself. Okay, so let me show this one first. Okay, so now you can see, right? I can just say minus 0.35, right? I'm buying a 70 cent option, which is $70. And with the moment it drops by $35, I just try to sell it off. Otherwise, you can also do set up a percentage loss. So here I set up, let's say 30%, right? I set up my trailing percentage here 30%. So I have a 30% on my premium. I'm okay. It took so 70 into 30% is like 21 cents. So basically my loss I can incur is like 21 cent. That's it, like $21. So I can just simply set up the option premium and confirm and send. So here my order, I'm trying to buy Microsoft option call 350 and I'm trying to sell for a loss of 30% of overall my premium. The moment it drops, the premium drops less than 30%, I am just going to sell it off. Okay. Again, you need to give all these, you know, the brokerage fee, right? 65 cents. Okay, I'll show one more time. I'll take another, let's say, I'll take Tesla. I'll take, this time I'll take something in the money call. So we say like 38.40, right? So most of the time, so typically most traders don't want to trade something which is a very high premium options, right? I would say that's not right. So you can still control your uh, options trading, and then still you can just buy something which is costly premium, but again you can still control your losses as well. So how you can do that? Right click, I'm going to buy, I click on edit, and I want to buy the Tesla options. Let's say I want to buy at 3500, 35, and I'm going to create a first trigger sequence right here, and right click, create a opposite order. I'll just change it to market price, whatever. Whenever you wanted to just get in, right? I'll change it to market right now, and I wanted to keep it trailing stop right here. You can keep a trailing stop right here for, I'm okay to lose $300, which is, this is what here. I'm okay to lose $300. Let's say you buy it at 38.75, and if at all, if the option premium goes less than $300, so usually a $3 means it's a $300, right? The moment it goes less by $3, and again you also need to understand that the options premiums keep changing, right? So let's take this chart right here. Okay, I think this is much better. Yeah, Tesla premiums were 1945, but I mean Friday it went up, right? It went up all the way to $40. It was 4 grand, right? So the best way, and most of the time, this is what the best way is. So instead of setting up certain dollars, you can set up this way too. But again, so let's imagine this scenario right here, right? And it's 26.47. It goes up certain price 29.93, and then what if it is drops by more than $300? So you'll be like you'll be selling it, right? Instead of that, I would strongly suggest you can just keep a percentage where I'm okay to lose 40% of the premium and continue trade. I know, for this option, 40% is huge, you can even like, keep, let's say I'm okay to lose only 10%. Okay to lose only 10%. But typically what happens, option change, they so fluctuating with the price movements and everything, right? Right. So I strongly suggest I can maybe 20%. Okay, 20%. You need to do your risk to reward ratio calculations, and then have a proper risk to reward management, and then you can select this. Okay, right now I'm trying to buy Tesla option on a market price, and at the same time I expect that moment they drop by 20% of the overall premium, I'm out. I'm just selling it. If you want to do something quick and much better, you can do like -5%, and especially if you're doing a day trading, so that you don't lose too much of your premium and everything. I strongly suggest, if it's a premium is high, you can maybe you can just do a 10% stop loss. But again, everybody has a different appetite. The one thing you have to understand, that options are so volatile, right? Options are so volatile, and you need to trade. But this is mainly for scalping. Okay, I'll just do -10% just for scalping, right? And you can also save this trade. So what I'll do, I'll just click on save here. Yeah, right here. So let's day. Okay, I'll just save it. Okay, I saved it. And then anytime you wanted to buy certain things, you can just so you can see right here, your order is saved. And typically, I'll choose something else. I'll choose something else. So I already set up like 10%. Let me go to Apple. And I select some other option, chain, copy. If you don't have, you think like, you don't have too much of time, right? I click buy custom and just select it. See, automatically they will change it to Apple. We can do that too, right? However, how comfortable you are. If you think that you have time to do options trading, day trading, and then come here, just set up, right? You can do it. I have a couple of, I'm going to share that actually, this particular. Okay, I'm sure, I think this would help you to set up the stop trailing loss and percentages on the option chain. And you can just if you do not, if you think that you already buy it, right? Let's say you already bought an option call and now you want to place it, right? Click go to sell and click on edit, and then go to trailing stop, and here just change to percentage. I'll set up -40%, right? -40%. Just set this up, confirm it, right? So I cannot sell an option without buying it. Okay. If you have any specific questions, keep me posted in the chat section, and then I'll hand over to Kishore.
Yeah, thank you, Sri. Thank you for explaining. So yeah, you can look at the chat, and if they have any questions, you can help to answer. In meantime, I will explain about right how members can benefit from various channels we have.
Okay, I think there is one question on our same thing. Let's say now for Apple stock, let's say I'll do the you can just do a buy and edit, and you want to buy with the market price or a limit price, you can do it at $159. I'm buying and change it to first trigger sequence. Right click, create opposite order, and trail stop. Here, instead of telling how much of dollar I wanted to lose, I will just say 10% right here. I'll just change it to 10% and just do confirm and trade. And you can also make a save the trade. So let's do save it. So you can right click, buy custom, go here. I can just go here. It's pretty simple. Most of my orders buy it and 10% stop loss, and that's it. I can just everything. You can sometimes limit price, market price. Be careful. Just make sure you select market. This is depends on how you want to make the trade. Yeah, you cannot combine. So somebody asked one question. Okay, so let's say we have this another order where okay, so I'm buying 100 stocks. Okay, I'm just buying 100 stocks of let's see, what is that? Mm, I'm buying 100 stocks of SNDL, and my first 50. Okay, let's say the target one I have for $1, and target two I have $2. Okay. Um, some people say that I need to set up a stop loss. If this is, they wanted to sell it incrementally for the first 50 stocks with a profit target $1 and stop loss at let's say 80 cents. Okay, let's say 80 cents. And the next 50 stocks they wanted to sell for $2, and here they're going to use a stop loss at different, let's say 90, whatever, like different. So I know that SNDL, let me go back to SNDL here. Stock is 72 cents already, so maybe I'll change it to 60 here. I'll change it to 50. Okay, I am buying SNDL stocks of 100 stocks at 72 cents. Okay, I'm buying at 72 cents, and I wanted to sell it in an incremental order, incremental, right? Basically, I wanted to sell 50 with the first target $1 and next 50 target $2, but a different stop loss. And how you can do this? You can split your uh, order type. So basically, I am doing, instead of just buying one order, one conditional order, I'm doing a two sets of conditional order. Everything is pre-planned. Um, right click. I'll just do the buy, edit, and I wanted to buy, let's say limit. I want to buy it at 0.72. I want to buy 50 stocks, change it to this one. We have two different targets, right? So for that, we are going to use a first trigger OCO. Okay, so what is the first trigger OCO? First trigger OCO, which will do a conditional order where you can sell for a profit, and also you can have a stop losses also you can mention. Let me just do one by one at a time. Let's just do one first trigger sequence. Okay, with OCO bracket, I'll just buy. I clicked on buy custom. Okay, with the OCO bracket. Let me show one more time. Right click, buy custom with the OCO bracket. Here I'm buying first 50 stocks at 72, and I wanted to sell for a profit of $1 or a stop loss, right? I'm just setting the first one now. I wanted to sell it for a stop loss. You can just set up your stop. Yeah, let's say do stop. Okay, I'll just set up the moment it goes by less than 60 cents, you can sell it here. Okay, this is trailing stop. You can also sell it, put it like a stop order where the moment it goes, less than certain price, you can set it up. Let's say 20 cents. You can sell it as soon as possible. You can set up like this. This is one target. I'll just set up. So I'm planning to buy 50 stocks, and my target is set up for $1. And you can do one more set here, right? I set two sets of conditional order. You can set up one more, one set already set up. You can also do another set here. Buy custom, go to buy custom. That was your bracket. Here, I am setting my target to $2, and you can place whatever like you wanted a stop, right? Trailing stop order, you can place it, or you can also place a stop order. What exact price you wanted to like sell it out, right? You can do. So you see, I have now two different orders are placed. You can do that, parallelly. Also, you can do it. You can set up like target one, target two. We can set up this way too. I know this is a little more confusing, but this is just like the same idea. We're just using it multiple times. That's it. Options also you can do the same thing. Let's I'll select same option chain. Right? You can buy two different option sets. You buy at 23 and select at whatever $1, and you can also have a stop loss at let's say trailing stop. I'm okay to lose like 5 cents. You can set up this way for one certain option. Let's say you want to buy like 5 contracts with a target of $1, and then another set of 5 option contracts target of $2. You can set up two different, but do not make it much complicated. I would say just keep it more simple as possible. Um, with one choice, with or you can do everything. Again, just do with OCO bracket, buy custom with OCO bracket. It keeps you can buy this option at 24 cents, and you can also sell it for a target of $1.24. And at the same time, the moment it drops less than certain price, right? You can just sell it off too. I'll show one. Okay. So what is this buy with custom order? So basically, it does that. it is a combines 3 steps. Basically, you're buying the stock and you're selling the stock for a certain profit with a sell limit order, but at the same time, it executes the stop loss too, right? It it bundles everything into one particular order where we can just buy at certain price, sell for profit, or execute for stop loss. So most planned trades will go like this. I want to do, let's say, Tesla. Okay, I'll just bring this, right click, buy custom, those you bracket, right? So here, whenever we trigger a certain alert, right, we say that, hey, I'm going to buy this option chain for $30 and I have a target of $40. And at the same time, the moment it drops by, it goes less than $27, I just want to stay out of it, right? Let me set up this trade, confirm and trend. Okay, let's do this. Apple, I'll pick something, a small premium. Right click, buy custom. I want to buy it at $1 and want to sell it at $2.04. At the same time, stop loss, right? You can set up 80 cents. You can set up this way too. See, I wanted to buy my option premium at around $1.04. The moment it drops, I'm going to buy it, and the moment after it buys it, I'm have a sell order at what is that? It's, right, just a $1 margin. I'm just selling for a $1 margin, and then now I'm going to stop loss at 80 cents. Right, very simple. You can just control your trades. Usually, this is what we do. So most of the time, we just buy it. Right, you buy it whenever we alert, and then we say that the target is $2 and you set it. And sometimes if what if the stock goes down and you are not covered, right? That's the reason. So even if the stock goes up or goes down, you still control your trade. Yeah, this is a OCO concept where we condition the order. Initially, the buy order is is waiting to trigger. Once the buy order is done, we would do the sell order for a profit or sell for a with a stop loss. Sorry, I'm not sure in Robinhood whether there is a conditional order. I don't think it is available. But I basically use the TDM in a trade. Okay, want to sell for a places trial stop for 10% and want to sell it for 20%. Yeah, I can do it. So right click, I can just do the buy with the custom. Right. So we're just buying on a certain price. Okay. And they wanted to sell for usually this will goes as a limit itself, right? And there is no like there is nothing like 20% or anything. You just have to set up, let's say $1.50, and here you can also set up a trailing stop. So the moment it drops less than, let's say, 15. So this option, I am trying to buy the option premium at 94 cents, but I set up a sell limit order for $1.50, and at the same time I set up my trailing stop to lose only 15 cents only. The moment the option premium drops less than 15 cents, I am just stay out of it. All right, it's set. I'll show one more time. Okay, so the same Apple, I click buy custom with OCO bracket, and I wanted to buy it like, let's say right now on a market price, and here I wanted to sell it. Let's say I wanted to sell it for 150. Okay, 150, and I'm setting here trailing stop. I'm setting 20 cents. If the option premium goes less than 20 cents, I wanted to just come out of it. This is the day trading example. Typically options are very volatile. They go by 50 cents less and then just keep picking up, right? So you can set up similar. Okay, let's do some other trades. Let's say do a Shopify. Okay, some of them are so costly. Buy with custom with OC bracket. Okay, so you have to understand here automatically what this one do. It will, you buy it at whatever the price, current price, the option premium, and then it will just add up like just $1. If you want to increase it, you can just increase however you want, but sometimes I would say you can it's better to save these orders right away and set up, let's say, trailing stop, right? You can save this. Okay, advanced option order trailing loss. So right click, go to buy custom here, and here you have advanced option order. So go there automatically, you can also like, especially you can lock and unlock here based on the option premium. This will be keep changing, right? Here we just set it to just $1. You can, however you want, you can just configure this also. You can configure it and save it as per your, how you, however you are comfortable trading with this OC orders. Yeah, you can set up for iron condor as well. I mean, you just have to like, set up the, the closing orders, right? The corresponding closing orders you can set up.
Sri, shall I go ahead and share my screen?
Yeah,
If there are some questions in chat window, you can.
yeah, I'll just put in the chat section.
Sure. Yeah. Thank you, Sri. Thank you for detailed explanation on trail stop loss. I hope
Yeah,
everyone got like what is the advantage, right? Because right, for example, 2 weeks before we saw how the DWAC moved from $10 to $170 next week. In one day, right? In one day, it moved nearly 1700% or like that. So in such cases, right, nobody can assume that a stock will move like that. Or PHUN moved from $2 to $24 in one day. OCGN moved from nearly $10 to 18.8, and suddenly again it dropped. So by having a trial stop loss, you are making the stock to run as much as possible, and then right when it is coming down, we can protect the profits. Otherwise, if we just put a stop loss, right, all it went nearly 100% up, 200% up, and suddenly it may go back, right? Especially right, most of you know that in within our stocks premium channel, we have three types of channels. One of them is the day trading, right? This trail stop loss is very, very useful for the day trading, because every day we see one or two stocks moving nearly 70, 80% up, 100% up, right? Every day, for example, we share something like some catalyst for the day, right? There will be some stocks, there will be some news, right? Like FDA approval, or it can be some merger or some company getting a huge project. So in the morning time, around right between 6 to 7:30, like that, you will see some news like, for example, GTech, right? Greenland launches second electrical industrial vehicle line, the Gel 1800 electric wheel front loader. So we know that now EV sector, right, with the bill, with the $2 trillion bill and all those things, EV sector is right very, very moving uh, bullish. So you saw something around 7 o'clock, and you see how this GTech stock moved on last Friday. It moved nearly 100%. But we, right, the analyst will give like what are the possible next two or three levels. But it moved to nearly like $12 or $13 from, or maybe 11 point change on Friday. So we got it 6.8. It So you don't need to just stop taking profits here. You can, by using a trial stop loss, it kept on moving, and then suddenly it started going down. Then you may give 10%, 15%, or $1, $2 as a trial stop loss, and you can, right, you can book the maximum profits. There can be more cases like PHUN, there can be more cases like, there are, within this year we saw more than 100 stocks which moved more than 200% up on the same day. So trial stop loss, especially, right, not before the market, your trial stop loss or stop loss will not work. But once market opens, your trail stop loss can protect your profits, right? Not only securing, right, not only trying to limit the loss, the trail stop loss will help us to, most of the cases that will happen, right? Many of us, what we try to do is, if stock is moving up, we think like, okay, let us, it will move up, we will be in that hope that it may move up more and more, we won't book the profits. Suddenly it can drop and it can go down below our entry price. But with the help of trial stop loss, if AMC is moving from $10 to 70, and from 70 it is coming down to 60, right, or to 65, if you kept trial stop loss as $5, at 65 it gets sold. So as part of this day trading, you will mainly see 3 to 4 types of alerts. This is good for, right, generally, if you have some experience in stocks trading, this channel is very good for them. For totally beginners also, they can take it, but if you have some experience, it will be more beneficial for traders with some amount of experience, because these stocks move so quickly up and down. So we should be able to take those quick decisions to book the profits. In the day trading channel, you will see the first type of alerts you will see in this channel is based on the news, right? The high momentum stocks based on the catalyst. There will be, always there will be two or three news every day, and those stocks will move high, right? GRCL, right? Another stock which moved very well on Friday. GTech, another stock. So this is the first type of alerts. You will see an alert for those type of stocks with a strong catalyst. You can you can take some profits at various target levels, or you can use the trail stop loss once market opens. You can use trail stop loss, and you can let the stock run. The second type of alerts you see in this channel are insider alerts. So if some directors or CEOs or CFOs, if they are buying some stocks within the company, right? We created some algorithm. We created some these bots which will look into the SEC data. If certain number of stocks are getting bought by those internal insider persons, that information will be immediately passed to this channel, right? Some VLCN, some director bought it, or you will see various insider alerts, which company directors or which CEOs are buying those shares. If you see some company, right, if some multiple insiders are buying it, even without the analyst posting the alert, you can immediately pick that up, right? For example, let us see, uh, this is donut on, so for example, insider alert, Kasi, right? There is a company who bought it, chairman and CEO bought it. At what time he bought it? 3:12 p.m. How many stocks he bought it? He bought nearly 2 million or some 2 million stocks. Immediately, right? It is a huge number of stocks he bought it. Let me show you something, right? So we have an internal team where I said that uh, insider alert Kasi, right? So I saw the alert at 3:12, 3:15 p.m. When this guy buys it, it will go up. Let's plan for Monday. So immediately you can see 3:16 p.m. right? How that stock moved up so high. So it is a great indication that whenever you see something, some insider alerts, it is we have to buy those stocks, right? I hope you got it right. So first thing is the high momentum stocks. There will be news every day. There will be 2 or 3 news related to FDA approvals or related to big projects, related to right, some earnings. Some company you expected that it won't make good returns, but it got so huge returns. So all such type of alerts will be posted in the day trading channel with some alerts, but you can also use trail stop loss and make it run. Right, the previous examples are all those GWAC or SCV or so many things. The second one is the insider alerts. Wherever you see these insider alerts, the analyst will post it, but even if you see it is by a chairman and CEO and it is a huge number of stocks they are buying, immediately if you buy it, we can make 10%, 15% within next 15 to 20 minutes, right? That is another advantage. So again, you saw, right, GTech, the alert was at 6.6 or something. Nearly it moved to 11.25, and you can see that tomorrow this stock will continue to move, right? Again, it may go down to 8 or 9, but it will move again tomorrow. So that is the second type of alerts. One is high momentum, second was insider stocks, and the third one is you will also see something related to IPOs, right? Whenever a new IPO, right, if they are issuing the stocks to the public, initial public offering, generally those stocks, if those companies are good, you will see those companies moving very very quick on day one and day two. After first 2 days, again it may slow down. Again, it will go to consolidation. Again, later it will come back. For example, another example, I think on Thursday, right, on November 18th, there was a new IPO. I think it was SCV, I think, or So, right, for example, this is the one, right? SCV. This is a new IPO. It got halted at $39. Sono Motors is an pioneering mission to accelerate the revolution of mobility by making every vehicle solar. Again, it is related to EV. So it went up nearly 50-60% within the same day. So we we provide that information of new IPOs, which has a high potential to move up. Again, you can use the trial stop loss and let the IPOs, right. They may go 100%, 200% also on the same day. That is another type of alerts which we provide in the day trading channel. And the fourth type is every day there will be some stocks halted, right? They move so quickly. Within a 5 minute period, if a stock price is going up by 10%, there will be a halt. The trading will stop for certain 5 minutes time. Within that 5 minutes time, the analyst will look at, for example, this HMTV got halted, right? It got halted at 137. Immediately he look at like what, right? Is it in a bullish? What is the RSI? What is MACD? All those things. He will post, right? What is the current price? What are the possible upside levels? And what is the stop loss? 8.6 shows weak means means if it goes down below 8.6, we can close it. These are like target one, target two, target three. So immediately you can see, right? Within next few minutes, it moved to first target done 10.5. Again, within next 3-4 minutes, second target done. So, right, that is the advantage with halts, where 70 to 80% of the stocks give quick returns within the same day. So you can see so many various halt alerts, right? HMTV, all targets done at 3 o'clock. So it was given at 143. From 9.4, it moved to nearly 11.15, nearly 25% profit within 1 hour. Right? That is the another type of alerts you see here. So high momentum stocks based on the catalyst. Second thing is halt alerts. If the stock is moving high, it will get stopped for 5 minute period. In that 5 minute period, the analyst will look at like, is it a good stock to take or not? Sometimes stocks can also go down, right? That is, it can be halt up or it can be halt down. If it is a halt down, for example, DWAC moved from $10 to 170, or OCGN moved from $10 to $18. If it is suddenly going down also, that is also a good indication for you. You can immediately close your stocks. You bought some stocks, it moved to $170. Now it is halting down quickly. Then that indication you can use and sell off. So there is lot of information within this channel where we can make good money using insider alerts, or using the halt alerts, using the high momentum stocks, using the new IPO information. There is a lot of things available here, right? You can see SKLG. So if you have experience, if you have the focus, right, you cannot do multitasking with the day trading, because these things move so quickly. You cannot just buy something and then go into a meeting and come back after 2 hours. By the time it might already moved up 20 or 100% up, and again it might be coming down, because everybody want to book profits, right? Once it moved so high. So if you have that time and attention, you can definitely, this is one channel where you can make a lot of profits, and you use the trailing stop loss concept which Sri explained, so that enlist may give only next step, what are the next three resistance levels from the current position. It may go to this point and there might be some sell off. If it breaks that, it might go to the next point. If it breaks that, it might go to the one more. But sometimes these day trading stocks, high momentum stocks, can go 1,000%, 2,000%, right? We shared a lot of times, but there are many stocks like DWAC, PHU, and so many stocks like that, which gave 500 to 1,000, 2,000% within a day, right? So this is about the day trading channel, right? The second one in the stocks channel, if you're subscribed to the stocks channel, you will also see related to the swing trades, right? Generally day trading, other than insider trades also, sometimes if you are buying such type of things, right? If you are buying where the number of stocks are too high, right? You saw the CASI example, right? CASI, where you saw that within 5 minutes from the end, from the right, the person bought it, he reported to SEC that he bought that many stocks. Immediately within next 5 minutes, stock gave nearly 15% profit. So you don't need to even wait for alert from the analyst. If you see huge number of stocks getting bought by, right, even we can see some movement in the donut tomorrow, right? Because the 10% owner, he bought a huge number of stocks. So that is one example. So generally, so all these are mainly for, you can make quick profits on the same day. Whatever alerts you see, Sri will give some short swings or high momentum, right? He, for example, he gave Macy's. He saw that it was moving so quick. Sri gave Macy's on Friday. Immediately, it gave nearly 10% profit on the same day within next 1 hour. He gave, I think, yeah. So, right, if you're already a part of the channel, you know all those alerts. But yeah, you see alerts from MK, you see alerts from Sri, you see, right, different analysts will be posting their alerts here, which will move very quick, which can move very quick on the same day. Then the swing trades, these are mainly stocks which may take few weeks, right? These purely based on technical analysis indicators, where the stock is, right, breaking the current resistance level, or it is right, the RSI is near to oversold region, and again people will start buying. So combination of various indicators, various chart patterns, various studies, based on all those things, analysts will post these type of alerts. So for these alerts, you should be ready to hold them for few days or sometimes few weeks, right? So day trading, it is generally most probably on the same day you can make good returns, right? 10%, 15%, 20% returns. Whereas these trades are where you have to wait for few weeks to get the returns, right? Here, if you are a new trader, these is the best channel to start with, right? You can, because you can just put a buy order. Oh, whenever XOMB comes to 60.65, I want to buy the stocks. And you can put a sell order also. You don't need to sit before the system and keep watching, right, when the stock will go to 65. You don't, right? We cannot catch that also, because stocks will keep on moving. So you have to create a conditional order. You automate the system. You assign that work to the think or swim. Tell that, okay, whenever it comes to 60.65, I want to buy it. Whenever it goes to 65, I want to sell it. Suddenly, instead of going up, if it comes down to 58, I want to sell it. You are creating a stop loss. That's what you do with the swing trades, right? You create a conditional order, you create OCO orders, or you create a first trigger sequence, which Sri has shown earlier. So you don't need to, right? Even though you are working, you are a busy IT professional, whatever it is, you can use those conditional orders and take advantage. In the lunchtime, you can quickly look at this and take some orders, right? Enter into some trades, then they will automatically get executed. You don't need to sit opening the system, Robinhood or Think or Swim, all these things for entire day, right? That is one more type where you see these like target one. So where, for example, if you have multiple targets, how you have to do? You are buying DGLY stock between so and so price, between 1.45 to 1.3. If it is in that range, you can buy this stock. Now stock moved to 1.9 within a week. Then what you can do is, now the current, initially the stop loss is 0.9. Now you can move the stop loss. Either you can use a trial stop loss, or you can manually change the stop loss to 1.3 or 1.4, because the stock is now at 1.9, right? You don't want suddenly it going back to point, right, less than your entry price. Change your stop loss to the entry price. Now let us say it moved to 2.2. Then instead of 1.3, now your stop loss can become 1.7 or 1.8. When it goes to $3, your stop loss can be 2.2. In that way, you are protecting your profits. You don't want stock suddenly going down. It moved all the way up to target 2 and suddenly it may come down. There might be a lot of sell off. It might again come down to 1.3, or it can even go to zero point 0.9. You don't want to lose your profits, right? You want to protect your profits. So either you can manually update the stop loss, or you can use the trail stop loss, which is basically you are automating the whatever manually you are doing, changing the stop loss every time it is going up. Trail stop loss is nothing but the same thing. As it moves to $2, if your trail stop loss is 50 cents, then your stop loss becomes 1.5. When stock moves to 2.5, stop loss becomes $2. Right? That's what you need to do with these type of swing trades. So you can protect all your profits. You don't want your green stocks to become red stocks. Right? That is how we will share in this, right? In the swing trades, basically where you can put a buy order, sell order, and you don't need to sit before the. For day trading, you need to have the focus. You only if you are an active trader, you have time to watch them, then only you enter the day trades. But if you are a busy person, you don't have much time, maybe you can spend 1 to 2 hours per day, you can enter these swing stocks, right? Swing trades, where you can just create a buy order, sell order. So whenever stock comes to this price, then buy will happen. Whenever it goes to this 1.9 or 2.2, then sell will automatically happen. Or if it goes to zero point 0.9, the stop loss will automatically happen. Like that, you can create the conditional statements, conditional orders in your right in your trading platform, and you can, in that way you won't have stress. You don't need to sit before the system. That is one more way, right? And also we have something called long-term stocks, right? For example, TTD, we entered at nearly $50. It moved to 110 plus dollars. So there are some companies with very good fundamentals, right? So which stocks we can buy for a long term, right? You are not worried about $1, $2 going up and going down. You buy them and you keep it for long term, right? They are companies with strong fundamentals, with strong right monopoly in the economy, or they have some great projects going on. Such type of, whenever there is a pullback or whenever there is some red days, you will buy such good fundamentally strong stocks and keep them for long term, where they can become 100%, 200%. UPST we bought for $96. Within 1 or 2 months it became $400. Again it went down. Again, if it goes to around 200, 250, we will buy it. Again, keep it for some time, it will go to 400 again, because they are strong, fundamentally very strong companies. So even if you don't have that 1 hour, 2 hours per day, you can just take these long-term stocks. So you can just track every 1 week once, right? So as part of the stocks premium, you get access to day trading, you get access to swing, you get access to long term, where you can take all these type of trades based on your time, based on your portfolio size. One is where you need focus, you have to quickly enter, quickly go out, quickly exit, where you can make 10%, 20, 30, 40% on the same day. One is where you don't need that much focus, but it may take few weeks for reaching the targets. The other one is it may take few months to reach the targets. So based on your time and other things, you can enter whichever you want. Then we have options, right? We have option channel. Again, in option channel, what we do, we do in two different ways. One is we give the alerts, right? The analyst will put alerts like this: Neo, so and so date, this is the call, this is the premium, right? So it means basically buying. We generally buy calls or we generally buy puts most of the time. We don't, uh, right? We don't sell in most of the cases. We don't sell calls. Majority we will be buying it. If you see if it is a sell, we clearly indicate that we are selling a put or selling a call. But generally you see alerts like this, right? In that means buying JD 20th January 2023 100 call, this is the premium, and this is the leap call. That means this is 2023 call. So we bought at 5.5, it reached it to 13.33. The leaps means these are like long term, right? Maybe next 6 months or more than 1 year. You have lot of time for the expiry. So if you are a busy, right, just like long term stocks, these leaps are, you don't need to immediately take them. Even if it is posted on yesterday, today also you can buy it, because you are buying some 6 months from now. That's such type of option expiry. So they slowly move. Suddenly, if there is some good catalyst or something, they can move and give great returns, leaps, right? And then you see some like swing. So let us see, for example, we have JP and we have CS and CSR, who are like, for example, let us say, right, you generally see like swing trade. Okay, I am buying DKNG, so and so date, 40th call. This is swing trade, right? Or you have analysts like KCEMG, Rambo, who are very good for day trading. So if you have time, you can focus, you can take up, right? You can quickly enter and exit the options. You have analyst where you can make on the same day, make 50%, 100% returns on the option premiums. Or you don't have much time, you can take swing trades. Or you don't have much time, you can take leaps. So either stocks or options, you have all different types of analysts, all different types of alerts based on your, right? If you are a new trader, always better to start with swing or long term in stocks. Same thing with options also, right? Day trading needs experience, or scalping needs experience, where you have to quickly do the things. If you are new to trading, start with leaps, right? So you gain experience, you get practice, how to use the tool, how to control our emotions, how to book the profits at regular intervals. And once you gain more and more experience, more and more right you more and more habituated with the tool, using this trial stop loss and all those things, then you can get onto the scalping and other things. But basically, that is right, that is how our stocks channel, options channel are there. And that is how. And we will also, right, the other advantage with these channels, you will be invited to some where, for example, today we had a webinar on NFTs, where right, endless CSR, Rambo, they explained about how NFTs is a great opportunity now, right? It is just starting now. It is a good time to enter into such type of um, right into that area to make some great returns. So that is another advantage. If you are part of these channels, you will be invited to some of the special webinars where which are only for the members of either stocks or options or crypto premium channels, right? That's what we want to explain, right? One is we will have this continuous learning sessions every 2 weeks. We discuss about what is Ichimoku cloud, or what is moving averages, or how to use trial stop loss. We'll be doing these continuous learning sessions. And also we want you to effectively use the, right, there are members making 5,000, $10,000 per day, but not all the members are able to use the channels, because are not able to get the similar benefit, because of not able to understand how to use these conditional orders, or how to use trail stop loss, or how to control our emotions and trim the positions, right? We cannot expect every option to move 300%, 400% up. It moved to 50% up, maybe take one or two contracts profits on one or two. Then it moved to 100% up, take on 50%. So now you got your capital back. Now let the other contracts run, and using the position size, right? Don't buy 10 or 20 contracts for every ticker, right? Always have a fixed amount. If you have a $25,000 account, divide them into 25 parts. Maximum you can allocate is $1,000 on any option ticker, so that you are only spending that 1,000. If a premium is $1, you will buy 10 contracts. If premium is around $2, you will buy 5 contracts. If premium is $5, you will buy 2 contracts. If premium is $10, you will buy one contract with a tight stop loss, like that. But you don't want, otherwise what will happen is, you may make profits on premiums where it is small premiums, suddenly you are buying one Amazon or Tesla contract, and if that doesn't go as expected, you may lose all your profits from 7 or 8 trades in one trade. If you constantly buy 10 contracts for everything, or you buy 5 contracts, or you buy 2 contracts for everything. But if you have a position size, you are maintaining $500 for anything. Now, even if one of the trade is not, or two of the trades are not going as expected, other 7 or 8 trades are making money, you will be in the profit side, right? So that position sizing is very, very important. And also trimming the positions, right? When you trim, you put a trial stop loss, you took some profits, and then you say that, okay, from this point, if it goes down by 20% down or 25% down, I will close it. Otherwise, it will keep on going. It will keep on running up. But if it goes down by 20%, or if it goes down by $5, you put a trial stop loss and let the option run it by itself. If it goes down by certain point, right, then it will automatically get closed. So you don't need to manually sit and do things. You try to use the advantages which your trading platforms are giving, right? We don't want to be like our older generations where they want to do everything manually, right? It is you have automation now. You are instructing the trading platform, when it comes to this point, buy it, when it goes to this point, sell it. So you don't need to sit before the system and keep on tracking things, right? So trial stop loss is a great concept. Practice it and take advantage of it with day trading or with options. It, especially with options also, it helps a lot, right? They can run, right? We have seen options going 1,000%, 1,500% up, but nobody can expect that something will Amazon. We never expected on the same day it will move 100, 150 points, or we never expected AMC can move 20, 30 points on the same day. So by so nobody can exactly expect the targets. So the trial stop loss will help us for that stock or for that option premiums to move as high as possible. And if they are coming down from that highest point, then you are not losing your profits. Only you are taking some from that point, it will go down to certain point, and then you are closing the positions. So your profits are protected. So yeah, I know again tomorrow is a working day. I don't want to take more time, but there is everyday market gives opportunities, whether stocks or options, whatever it is. We have opportunities each and every day. Only thing is, let us take time to practice. Let us try take time to understand, and we all can make good money, right? Always there will be risk, right? I'm not saying that after practicing every trade will become successful, but with proper risk management, with proper trail stop loss, or by closing the positions, right? Out of 10 trades, always we may have 2 or 3 trades which may not go as expected. And don't try to follow all the analysts in the channel, right? Maybe select your 1 or 2 analysts based on your time, based on your, right? You, for example, you are in all the day you are in meetings, then maybe Casey may not be a right analyst for you, because he gives something within next few minutes, it may go 50, 100% up, and it may come down suddenly. But if you are entering and then going into a meeting and coming back, already your option premiums might went up so high and then came down. So look at your time, and based on that you select your analyst. Not just on the profits, you also need to see whether you have that experience to do day trades and scalping or not. If not, select some other analyst. Right? Do you have that experience to take the halted stocks and quickly book the profits or not? If not, maybe start with swings or start with long-term positions. And then once you gain profits, maybe use that and take risk on day trading or on the scalping, all such type of things. So only remember that market every day, right? Whether it is a green day or red day, every day we'll have opportunities. Every day we'll have high momentum stocks. Every day there will be halt alerts. Every day there will be insider alerts. We have opportunities every day. Only thing is, let us try to take some time to practice, and so that we can make money. Otherwise, we if we are on a hurry to make money, we may be making mistakes. We may be losing rather than gaining. and we think, okay, it is not working for me, or we try to blame someone else, right? That's what generally happens. Right, that controlling the emotions and also learning the strategies of using trail stop loss, or trimming the positions, or maintaining the proper position size. Stocks also don't buy some, right? Again, have 3%, whether it is option or stock, maximum 3 to 4% of your portfolio on one ticker. Nobody knows. Suddenly tomorrow there might be a news that AMC is getting closed, or Tesla. Elon Musk is selling all his stocks in Tesla. Right? Even though it moved to 1200, suddenly with one bad news in the night, or it may be a rumor also. But if everybody starts selling it, stock may go to $800. So don't put all your money on one ticker. Always try to split into 25 parts, whether you are buying a stock or buying a option premium, maximum 3 to 4% on that. Right. So yeah, with that, wishing each and everyone all the best, and we'll have another great week starting from tomorrow. Again, it is a short week. We have a Thursday holiday. Friday will be only limited hours of trading, but still, I am right. I am thinking Apple will continue its run. We'll have Apple, and also we gave the watch list. And every day we'll have these high momentum stocks. Every day there will be some news that will drive that stock, and that stock will move so well in pre-market. Again, when market opens, it will come down. Again, in the power hour between 2 p.m. to 3 p.m. CST, again it will run. So we can make money on the same stock for 2 to 3 times on the same day. Right? It is not that stocks will move only in one direction. Sometimes they move 100% in the pre-market. Again, when market opens, they come down 50%. Again they move up. Again, right, they come down after 11 to 2. They come down again, 2 to 3, again they go up. So within the same day you have so many ups and downs. So only thing is, if we know when to enter, when to exit, we can make profits each and every day. So yeah, thanks everyone for joining on a Sunday night, and wishing you all the best, and have a great week.